Hey traders! It feels like it's been quite some time since we last came together to dive into ways to get the most out of our indicators. Today, I'm here to help you elevate your trading signal's reliability with a powerful tool, the Tick Data Microscope indicator. This indicator gives you the ability to observe detailed price movement within each tick, revealing the smaller patterns that form within a single candlestick. These are insights that just aren't visible with a regular candlestick chart, and they can provide a deeper understanding of price dynamics that can be crucial for refining your trades. First, let's dive into an example of how to enhance the reliability of the Tick Data Microscope indicator. We'll start by using a straightforward NT8 tool that we've integrated with Tick Data Microscope Region Highlight X to select the candlestick we want to analyze. However, if you're trading live, you can simply set it to automatic mode, and it will automatically highlight the current candlesticks, making it easier for you to analyze them on the fly. This way, you can focus on the most relevant data without getting bogged down in manual selection. After zooming in, you'll notice a significant gap between the first and second candlestick. However, this gap isn't visible when looking at standard candlestick charts. You can only observe it through the price trajectory. This insight helps you understand the underlying price action more clearly and can guide your trading decisions. By examining the trajectory of these two candlesticks, we can see that after creating the gap, it was filled in the second candlestick. This is an example of a hidden gap that you wouldn't catch with conventional analysis. When the price opens with a gap up, fills that gap, and then continues to rise, it supports the idea of a stronger bullish momentum. This kind of insight is invaluable for traders looking to capitalize on potential price movements. Let's move on to another example where a buy signal appears, along with the price trajectory forming a double bottom pattern. This pattern indicates that the buy signal carries a high level of reliability. The two bottoms demonstrate that this price level has been tested and held firm. This builds confidence among investors, suggesting that there's strong support at this price point. It's crucial to note that this insight is something you wouldn't be able to see with just a single candlestick analysis. Understanding these patterns can significantly enhance your trading strategy. Next, we can observe an accumulation pattern within a single candlestick. When a candlestick forms, there can be various patterns developing in its price trajectory, and one of them is the accumulation pattern. For a price to rise sustainably, it often needs to undergo some accumulation beforehand. With this indicator, we can clearly see the accumulation pattern, which helps us assess the reliability of the signal candlestick. Recognizing this accumulation phase is key for making informed trading decisions, as it indicates potential strength behind the price movement. On the flip side, we can see that in a downtrend, for a sell signal to have high reliability, a distribution phase needs to take place. By examining the price trajectory, we can clearly observe the distribution occurring. Notably, you can see this distribution happening within the range of up to half of the candlestick. This indicates that the sell signal is indeed reliable. Recognizing this distribution phase provides valuable confirmation for traders, as it suggests that there's selling pressure behind the price movement, reinforcing the validity of the signal. Now, let's look at a broader example on a minute chart using the multi-OSC-OB-OS overlap indicator. Starting with a sell signal, we analyze the last 4 candlesticks leading up to this signal. One key observation is the clear break of a critical support trend line, indicating that sellers are gaining control and buying pressure is weakening, which strongly supports the sell signal. Additionally, as the price declines, a new downtrend line forms, further reinforcing the bearish sentiment. This combination of a broken support level and the establishment of a downtrend line provides strong confirmation for traders, highlighting a significant shift in market dynamics. It shows that previous buying interest has diminished, making the sell signal more reliable and helping traders make more informed decisions. Next, let's examine a particularly compelling scenario involving a buy signal. In this situation, the price trajectory allows us to identify a long-term resistance trend line. When the price breaks through this established resistance level, it indicates that a bullish movement is forming and that buyers are stepping in with strength. What makes this scenario even more significant is the development of an accumulation zone prior to the breakout. This accumulation phase suggests that traders are building positions and waiting for the right moment to push the price higher. After this period of consolidation, the price ultimately breaks through the resistance trend line, signaling a strong commitment from buyers. At this point, the buy signal gains even more credibility, as it is supported by not just one factor, but 2 critical elements: the breach of the long-term resistance and the preceding accumulation phase. This combination provides a robust confirmation for traders, allowing for a higher degree of confidence in executing the trade. Understanding this analysis through the lens of price trajectory is essential, as it highlights the underlying market dynamics that may not be visible through traditional candlestick analysis alone. Now, let's explore a particularly intriguing scenario that involves a sell signal. In this context, the price trajectory reveals a long-term support trend line. When the price falls below this support level, it signals the emergence of a bearish trend and indicates that sellers are starting to take control. What adds to the significance of this situation is the formation of a distribution zone leading up to the breakout. This distribution phase implies that traders are offloading their positions and positioning themselves for potential further declines. Following this period of selling pressure, the price breaks decisively through the support trend line, demonstrating strong commitment from the sellers. At this juncture, the sell signal becomes even more compelling, backed by not just one, but two key factors: the breach of the long-standing support and the earlier distribution phase. This powerful combination offers traders solid confirmation, instilling greater confidence in their trading decisions. You can even use the tick data microscope to validate the reliability of trend signals, as illustrated in the following example. When a trend is forming, you may notice several candlesticks exhibiting low volatility. The question is, how can we assess whether this low volatility is reliable? We can analyze the price trajectory of these candlesticks, focusing on the period from when the trend begins to reverse until the moment this low volatility is broken by an engulfing candlestick. During this analysis, you might observe the formation of a support zone that is continuously tested without being breached. This indicates that there is strong buying pressure at this price level. Following this, if the price breaks through the resistance trend line, the bullish signal becomes significantly stronger. At this point, you can confidently execute your trade as soon as the trend line is broken, leveraging the insights provided by the tick data microscope to make informed decisions. Similarly, for the sell signal, the price forms a range and consistently moves within that boundary. By analyzing the price trajectory in this case, you can clearly see that the price has broken down through the lower boundary of the range and has tested this lower level 4 times without managing to rally back up. This repeated failure to rise reinforces the bearish signal, indicating that selling pressure is strong. As a result, the reliability of this sell signal is extremely high, giving traders confidence in their decision to enter a short position. In this video, we've shown you how to effectively use the tick data microscope indicator. This powerful tool can help you identify hidden gaps, support and resistance levels, accumulation and distribution phases, and trendline breakouts, all of which enhance the reliability of your trading signals through price trajectory analysis. I hope you found this information valuable. If you enjoyed it, please give us a like, subscribe, and hit the notification bell to stay updated with our latest videos. Thank you so much for watching.